everyone I've ever met who succeeded is extremely strong and extremely capable at the ability to let go. They're not perfect by any sense, but they are far better than most. And that becomes almost a defining feature that underlies all their success in the markets. You cannot become like someone else. You have to become who you are. What I mean by that is we all have different personalities, different personas, different experiences behind us, and that shapes who we become. And we have to trade in a way and take risk in a way and run risk in a way that is aligned with who we are. One hat was my analysis hat, and the other hat was the risk-taking and risk management hat. And the analyst would look at the market, would come up with trades, and I'd have that hat on there. Then those trade ideas had to be given to the other one, and I had to work out how to put those trades on, how to manage them, how to monetize that idea, whether that idea was monetizable for me, in the way I worked. It might have been monetizable for someone else in the way they worked, but for me it wasn't, so I had to fit with my process. And that is where I went, and I became a much better trader in those last 10 years of my career.
Welcome back to the Unpacking the Markets podcast. Now, before we kick off, can I please ask you to subscribe to this channel so that we can continue to grow and help traders worldwide. Let's get into it. The ability to let go is the greatest and most underappreciated skill a trader can possess. It is in the letting go phase of your performance process cycle that the mental game is mastered and won. So why is letting go, so important for trading?
Okay, the ultimate battle for the trader is the battle we face with ourselves, which I simplify in the book, although it's more complex than that, the battle we face with our ego. And the ego is a horrendous narcissist, which, although it has your intentions, your best intentions, and only your best intentions at heart, in the game of trading, in the processes needed for trading, it will massively undermine us, and disrupt and distort all the processes and behaviors that we need to do in order to transact what we do effectively. And the way to deal with a narcissist is to just let go, not allow them. They try to own you. They try to take over you. They try to then direct you in the way they want to, and that's what the ego does. It wants to project you in a way narcissistically, so that you are the greatest thing ever. And it wants instant results, instant wins, instant victories. That is not something that happens in trading, in a world of uncertainty. Trading follows a process. A results orientation is usually a disaster in trading. So you have to let go of that. You have to let go of, the way you deal with a narcissist is to no longer, just to let it go so that it no longer affects you. Okay, it kind of releases you. It frees you to then be able to execute your process and your behaviors well in the market, effectively in the market. And we stop turning in on ourselves. We stop beating ourselves up. We stop putting ourselves down. So one of the things in this job, and I meet this with clients all the time when I'm coaching them, is they have this warped perspective of themselves, which we all do. We all see ourselves through certain mirrors and certain lenses that often we want to see ourselves when things are going well, or that distort ourselves and make us look um, less able, less capable, almost sort of we think of ourselves as idiots. We put ourselves down, which is really the ego doing that. So
Yeah.
we need to be good to ourselves. We need to be kind to ourselves. We need to value ourselves properly. We need to see ourselves for what it really is. And I'll just give you an example of someone in the hedge fund world who I worked with just recently, where I've had this conversation. And this is an amazing trader who has made an awful lot of money in over 3 years for the firm that they work for, but has struggled this year and has turned in on themselves and is putting themselves down and undermining themselves even further, reducing their own self-belief, their own self-confidence, accentuating self-doubt. And that's because they believe they're absolutely hopeless and clueless. And that is not a basis to trade. When actually, if you took a step back, and if that person took a step back and saw what they've achieved in that time, and could realize that, their particular market has not been generous to them this year, and their particular style in that market has not been generous this year, it's not been giving, they would just let go and they would see what they are, and then they would start trading better because they're self-sabotaging at the moment. So for that
Yeah.
person, it's letting go. Let go of that need to make money when conditions just aren't right for you to make money. Let go of what those results, how you're interpreting those results based on yourself. Let go of the fact that you're trying to make money using a style or method that is not your preferred process and which it doesn't give you an edge, and get back to doing what you do best and trust in the process. And for me, that captures everything. Everyone I've ever met who succeeded is extremely strong and extremely capable at the ability to let go. They're not perfect by any sense, but they are far better than most. And that becomes almost a defining feature that underlies all their success in the markets. The ability to deal with setbacks, the ability to move on from setbacks, the ability to not be owned by the outcome, the ability to value themselves, in a humble way, but to value themselves correctly, and the ability to not turn in on themselves and become their own enemy and their own saboteur.
Hmm.
That is not easy, and that's why so few people can do it well, and why developing that ability then becomes a key skill which supports elite performance.
Wow. I think you really nailed that. I've got so many goosebumps here listening to you. There, it's
Yeah.
an amazing answer, and I feel like I think when you are trading, that kind of introspection, I think I personally never found it like it was the immediate answer because it seems so self-reflective. It seems so far away
Mm,
from this thing I'm doing. I'm in that one phase of the performance cycle, but I don't check the other ones. I'm
mm,
just focused on my strategy. But then, as you said, you can have this whole other kind of tilt happening in the background that maybe you're not aware of, and all of a sudden, you start to be hijacked in that process. I think, like you talked about, by the ego, and then I feel like it just spirals. I think I saw in your book the phrase "the death spiral" for a
yes,
trader. Um,
yes.
yeah,
And by the time you realise you're in it, you've already been in it for a long time. And in fact, the best ones, if there is such a thing, I delineate there as being two types of death spirals. The really painful one, which comes up quickly and hurts quickly, and you recognise it quickly, and you can deal with it, even though it's hard because it's so visible. And you have to let go. You have no choice. Otherwise, you'll be owned by it. But it's actually the soft ones, that the soft tilts, I call them, where you don't even realize you're in them,
Yeah.
and it comes up on you, and you're just not aware that you're there, and it just erodes over time slowly. And there's nothing that's saying you're in it. You're not going to do anything to get out of it. And also, when you are in it, you're just not going to be aware of what took you there, because it would have happened below the level of consciousness.
Yeah. And
And I can give you,
that aware. Sorry, you
yeah,
continue now.
I can give you a recent example with a client who came to me and had been, it was almost like an emergency call. Steve, I need to see you quickly. We need to talk about this. And he said, and this is a client who I would say is largely a stranger to fear, but he said, I've been gripped by fear. I can't put anything on. I can't take risk. I don't know what's happened. And we had a session and we unpicked what was going on for him against the process cycle. And what had happened, he'd had a trade on. It wasn't going well. He took the trade off, and then it absolutely exploded upwards and would have made an absolute, what we'd call the classic truckload of money. And that really disturbed him, and it disturbed him to think that he'd done that in such a bad way. He kind of lost his confidence from it. When we unpicked it, when we went back to the roots of this, the trade he took was something that he'd looked at previously, assessed the likelihood of it happening, that the context of that trade. He did a lot of research behind it, and he decided there and then that wasn't a trade that he wanted to have on. It didn't tick his boxes. Okay.
Okay.
It might have worked for other people, but it wasn't something that he would bring into his process. Even if it goes well, it just didn't. It's something he didn't want to have on his books. And then a couple of weeks later, during a conversation with someone he respected a lot, this person said, I'm putting on this trade, and it was the same trade. And impulsively, he just went back and he put it on for the wrong reasons. So, of course, when that happens and a trade starts to move against you, which is what happened on this occasion, most trades, certainly in my experience, most of the best trades don't go well to start with instantly.
Yeah.
And this one moved against him for a couple of weeks, and he started to lose his faith or trust in this particular trade, because he didn't have any trust in the first place. It wasn't his trade, and he cut it out. And then shortly after that, it took off and never looked back. And that was what disturbed him, that missing out. But he took the trade for the wrong reasons. If he'd have taken the trade based on his own analysis and assessment, he probably would have sat through the pullback and stayed with it, because he had a longer term view or a different reason for getting in the trade, rather than the reason which was somebody else said it was a good trade. And that person who said it was a good trade, he had his reasons for being in it that were different, and probably would have sat back through the pullback, probably been more comfortable with it, because he had his own research and his own process behind it. And it was that failure at the very early stage of the process and following his process which suddenly created this self-doubt within him. And then he turned in on himself. And as soon as we unpicked that and he saw that and he realized what he'd done and where it came from, the fear was gone. He was back on it. Okay, I've let go of this. I know where it is now. I know where I went wrong. I've learned something from this. I'm going to take this on board as well. And he moved on, and suddenly there was no more fear in his trading. And that's a great example of letting go. He let go really quickly on that occasion, because he was able to process it, understand it, forgive himself, which is a big part of letting go, and then move on. And this is why I say it's such a great skill, because the ability to forgive yourself, this is that theme which runs through the book, that idea of self-compassion, the idea that, we cannot know what is going on out there. It's a probability estimate at the very best,
Yeah.
a subjective one. And a lot of the time, it's just not going to work. And, you know, for us to beat ourselves up because we lose the toss of a coin, which is what happens as a metaphor a lot of the time, just makes no sense.
Yeah, it's incredible that the power of the awareness, or that awareness you brought to it. That, I mean, I guess you can't forgive him. He has to go, or he or she has to go through that process themselves. But the fact you just brought awareness to it, um, it just reminds me of, I was talking to a friend recently, and that kind of self compassion or beating yourself up I relate to a lot. And very smart guy asked me, when you look in the mirror, what do you see? It's a bit of a psychology background, this guy. And I just, started listing kind of faults and things like issues or whatever. And slowly we got talking, and he said, "Well, do you think that you're okay with that kind of your self image or how you think about yourself?" And then I had been having issues with trading as well at the same time. He said, do you ever think there might be a link between how long you take to recover after doing something stupid and your kind of self image? But when I looked at trading, I guess up to this, and even right up to before I was reading your book, it was just doing the thing, and it had really no impact on the me part of it that's doing it. And then when you start to be aware of that, it just, the whole thing starts to change a little bit. And one
Oh,
feeling I had when I started your book was a kind of looking at myself while I was trading feeling. I don't know if any of your clients have said this, but that was the feeling I got when I was going through and it was a bit uncomfortable. I was thinking, yeah, that was me doing the thing. But has anyone ever said that?
yeah, but you've almost defined letting go there. The ability to see yourself in the moment in real time. And I don't know if you can see over my shoulder behind me on
Mm.
the wall. There is a poster of a painting by the Belgian artist René Magritte, which is of an individual looking in the mirror at himself, and all he sees is the back of his head. And
Yes.
yeah, Magritte is a Belgian surrealist artist who's known for his depictions of familiar objects in unfamiliar and unexpected contexts, which provokes questions about these natures and boundaries of reality and representation of life. And I chose that because that for me is this challenge. We don't see ourselves doing it. We see something different. We don't see reality. And actually, if you can step out of yourself, okay, and start to understand what you're really seeing, what reality is, then you can start to let go. You can start to forgive yourself. You can start to work better and trade better. And I first saw this with one of my early clients over a decade ago, who I worked with. He was describe him as a prop trader, although he was on the sales side. He worked for a large US investment bank. And the introduction when I started working with him from his line manager was, consider this a very large global US investment bank. And he said to me, this individual is probably the best trader in the entire firm globally. And he'd like you to work with him. So I started working with him. And this trader was extraordinary. His story is actually in the book, although I've changed the name, the circumstances, everything about him. But because I had to do that to get some of these stories in there, they said, okay, but anonymize me. Um, if there was anyone, the first thing I noticed about him was I said to him, I said, look, as I've got to know you and understand your trading and how you work, it's almost like you step out of yourself in the moment, freeze the moment, and look at yourself in that moment when making the decision, when making
Wow.
the choice, when assessing the situation. It's almost like you can freeze time, step out, again, purely as a metaphor, of course, um, and then look at himself and go, what should we do now? What is the
Mm.
right thing to do at this second? And time is frozen, and he would do it, and he would do it without ego. He wouldn't do it based on, look, I need to look good, or I need to make, I need to make more money than the guy on the net desk or anyone else. It was just, this is what the market's doing. This is our position. This is our situation. This is how the story's changed. I think we just need to exit the trade and then reassess it. And he would do that. Whereas other people might, I don't know, just hang on, maybe add more. Suddenly they make a decision in that moment, which is usually an impulsive decision, or quite often the wrong decision, and then later on becomes the root of where the problem started. He would just so often make the right decision. Now that is extraordinary risk taking. That is exceptional risk taking. The more you can detach yourself from your ego, the better as a risk taker you will be. The better you will manage your risk, the better you would deal with uncertainty. And that is what the letting go is. He was a master of letting go. To that point, he was the best individual I'd ever come across at letting go. Since then, I've met quite a few who I would categorize to the same level. But, and I found him extraordinary. And the amazing thing was, I thought I was learning, as a coach and a former trader, so much from him. But actually, he said to me, I've learned so much from this process. So that was another part of it. He was listening, he was reflecting all the time. He was, enjoying talking things out. And then he was learning from it.
Yeah. As you talk, it's just bringing a thought to mind that sometimes you think that the institutional traders are the kind of, I guess, superheroes of the industry that are infallible. But when you describe some of their problems, um, there are things I'm sure a lot of retail traders can very much relate to. It's not that they are, I guess, they are people after all and subjective to the same kinds of psychological challenges as anyone else. If it's, you described there, you know, not putting on more size as the trade is going against you, even though the stories change and you shouldn't be in it anymore. It's like, wow, I was thinking I've done that, that's what I was thinking.
They,
And a couple of other things. So,
they all do it. This is what I say to people, whether you're a retail trader, private trader, institutional, sell side, buy side, we're all facing the same challenge, which is the mental challenge, the human challenge. We're all wired the same. We all those different things may nuance slightly differently depending on our experiences, the way our philosophy, um, our beliefs. But ultimately, we all face these challenges. I haven't met anyone yet, and some of them are the biggest names, both in retail and private trading and institutional trading, who hasn't or doesn't face these challenges.
yeah. And obviously you've had quite a long career as a trader, kind of at the highest level. Did you face challenges in, say, letting go, for example, or what were your kind of key challenges you had to face in your
Yeah,
early
huge,
career?
huge challenges. You never stop having them because you never stop being human. Okay,
Mm. No.
so they're always there. Um, but it's that ability to be able to do that within your framework. I mean, there will be some elements of how you are which just won't. You cannot become like someone else. You have to become who you are. What I mean by that is we all have different personalities, different personas, different experiences behind us, and that shapes who we become. And we have to trade in a way and take risk in a way and run risk in a way that is aligned with who we are. So, for example, I'm not someone who, as a trader, could run multiple risks with maybe 10 or 20 positions on. I was really someone who boiled everything down to one or two big positions at any one time. I would describe it as someone who goes deep rather than broad.
Okay.
Um,
Yeah.
So that is who I was. That's how I worked. That was my personality. So I could only trade in that way. I could never run a portfolio with multiple positions on. It just didn't suit my style. Other people are the opposite. They're much better at going broad with a broad portfolio of lots of different positions on that they're constantly managing, constantly
Mm.
assessing. And I was quite, I also had to work in a way which was, well, it kind of matched my philosophy, but I like to take my own risks. So even though I worked in the sell side for all my trading career, I was more of a prop trader. I didn't like quoting prices. I didn't like having to make clients prices. I like taking and running my own risk. I like being on the top of my positions. So that was another part of the way I worked, or how I worked best. And that also sort of ran into a lot of problems, because I was in a place where you're supposed to take and run lots of multiple risks and portfolios, and quote clients. So it caused a few issues for me at times. And it also meant that I was taking a different perspective on the market, whereas a lot of the traders around me could be in and out of the market because they were constantly being put into positions so they could take profits and then be put into the position again by a client order or client transaction, and then, or into the view, and then they could take profit. I couldn't. I didn't have that opportunity. So I had to find a way of taking trades which would run for a longer time to capture the big move that I saw happening. And that actually created a source of conflict with some of my colleagues or managers at times. So understanding your nature, the way you work, how you work, who you are, and how you're going to get the best out of yourself is really important. You
I
have to know who
yeah,
you are. Yeah,
sorry, I was just you've just reminded me when I spoke to Tom Basso, he was giving out about people taking on black box systems, trading systems that were made by someone else, and his key point I think is a very similar one to what you've just made, and it has to be a system designed to work for you, and not
yeah,
just your schedule, as simply, but as you said, for your who you are, your personality, or even your restrictions at work or whatever it might be.
yeah. The amount of capital you've got, all those things, the resources you have available, the time you have available, how you live. You've got to be able to put food on the table. You know,
Yeah.
um, you've got stakeholders. Everyone has stakeholders, even if they work for themselves. Their wife, their partner, their kids. You've got to provide for them normally, or maybe
Mm.
if you're lucky, they'll provide for you. but but you've time is really important. If when you're just starting out, you need to survive the learning journey. You're probably only going to make money through luck in those early years, because you're not good enough to actually generate a sustainable income through skill. You just by default have not had enough time to learn.
Mm.
So surviving that learning journey, which usually takes years, to get to a point where you're competent enough to then just start generating income, and then constantly learning to work at getting better, maybe refining your process, building something that is aligned with who you are and your realities.
Yeah. Was that your biggest challenge then when you started? Was um, finding a kind of strategy or an approach or a style that worked for who you were?
No, that was a bigger challenge later on. um,
Okay.
I, I, I wasn't, when you start, you're thrown into something. You're green. You don't know what you're doing. You learn from people around you.
Sure.
You absorb. You try different things. Some things work, some don't. Some stick, some don't. Um, and then it's almost like you've got this great big broad universe of strategies, tactics, methods, systems, and in a way, you're giving all of them a chance. And over time, you're
Mm.
starting to eliminate a few, and a few disappear along the way, and you'll be guiding towards the things that will work, and your process will take that shape of moving around over time. And maybe you'll be on a wrong path and you'll bring something back in. But ultimately, if you're successful, you will be doing something that aligns with who you are. And, I love Tom Basso because I think he's got the greatest attitude of anyone
Yeah.
I've ever met. who does this job. I always wish I could have been him. Just that, Mr. Serenity, um, that way of being calm. But in a way, you do want to get towards that.
Yeah.
You do want to get to that place. Um, but it's not for everyone. I when I trade, when I take risk, I'm a different sort of person. I become naturally stressed until I get a trade done, and if it's working, I get calm. But I was really weird as a trader. Um, I could have full risk on and be really calm because everything's working well, and I put a lot of work into it, and I like the way it's going. And I could have tiny risk on and be really stressed because I don't know what's happening, don't have any sense of what's going on. Um, Even no risk would stress me, because of a continual period of no risk, because I don't have any ideas, I don't see the market. I'd become stressed, which wasn't
Mm.
necessarily helpful. Um, and like I say again, we're all different. We're all built differently. But to get to that place where he is, I mean, wow, to be able to work like that and to have that sort of
Yeah.
clarity and not be owned by what's happening out there in the market, and yet still to be engaged with it sufficiently enough.
Yeah. Um, yeah, it's funny. I meet these people. I mean, you're the next person that I've met. Tom is another person. Jason Shapiro, and everyone has their own have what's worked for them. And as you said,
Yeah,
that that journey with the process, I can really relate to because I started working with the coach, Bate Nussbaumer, who I know you've had on the show. Who's a great guy. He's a great character. He's an FX macro guy,
yeah,
and I hadn't started the podcast at that point. And then I start the podcast, and then you have all these other ideas about people, what they're doing, and I'm thinking, I could just so relate to when you said there's this ocean of strategies and styles, and I'm thinking, fuck, which one do I, which one do
yeah,
I go with? This works for him, and yeah, so I can relate to that.
yeah. And Jason Shapiro is another incredible trader, but you can see he's actually quite highly strung. When you
Oh
get to
yeah.
know him, when you talk to him, he's kind of the
Mm.
opposite to Tom Basso. Um, Brilliant trader, and if you read his story, I think it took him about 10 years or more, maybe, to finally start almost coming to terms with what this is. But he battled away, he kept going. He knew there was something out there, and he was contrarian by nature. That's who he is.
Yeah.
So when I talk about a style that fits you, his
Yeah.
entire process is built around this idea of being contrarian to the market. And I always point out that a lot of people think contrarian means being counter trend. It doesn't. It can be pro trend as well. But he's a great example of someone who has built a process really geared around his strengths and his abilities, and away from his weaknesses and his aspects, because we all have weaknesses and within our character that just won't do certain types of trading well. And he's really harnessed that and built that into a into a a trading process rather.
Yeah. Yeah, it's funny. It really ties into what we started talking about and who you were. And when I interviewed them, I didn't maybe realize that Tom's process is perfect for who he is, and Jason's is perfect for who he is. And then we're just talking
Yeah,
about who we are. It's like
yeah,
yeah, it's a
absolutely. And if if you can, I've got some people that they're so structured in their belief and how they are, and they're so evidence based, and they work in that way, and they couldn't work any other way. And then I have other people who are so highly intuitive, and sort of pattern recognition monsters, and
right.
they work in that way. And the two of them, that those two types of people can both succeed. They both need to add on elements um, to themselves where they have blind spots. So, the sort of highly intuitive types need to add some structure, um, and a high dose of risk management, to really capture what they have. And the other types sometimes need to listen to their intuition a little bit and not
Mm,
just be sort of robotic about what they do. because that's where if they could really capture that evidence-based structural element, and then add an element of, listen to their intuition. Don't always wait for everything to have to be confirmed, because by then the market has moved. So it's really knowing who you are, how you work, knowing where your strength is, how you leverage that, and then what the counter productive side, or the counter elements of that personality, that nature is, and where that's going to undermine you, and where you can address that, and perhaps fill in some of the gaps that are showing up that become your behavioural gaps, your behavioural slippage.
Yeah, it's brought up really well that I wanted to talk about behavioural slippage next, but before I do, you reminded me of once. Obviously, Bates he's a strong character, and one strategy he introduced me to was kind of it's kind of like quite just purely technical price action. Hit the level, identify the level, and then just hit it. As in, that's your limit orders on the level. And before he did, I was a very trigger kind of person, wait for the trigger, get the trigger, and then I said, oh, well, what about, the trigger? He said, fuck the trigger, hit the level, and then I had that little bit of behavioral slippage in that, in that strategy, because he was like, just hit it. And I was like, I need the trigger, you know what I mean? So it's,
Yeah. But
yeah.
he will have had that deep level of experience where things become second nature to him that other people won't have had. And that takes many years to develop and build, where you don't even know what you know. So
Yeah.
I could do that in my trading, where I would have a setup and I would have a set of circumstances that I was waiting for, but I'd actually acted before they came along, because something just said to me that, that 20 odd years of doing this had said to me, this is going, you don't need to wait, just get on it. And then,
Yeah.
rather than wait to the levels where I had to add more, it was, I'm not even waiting for that, add more. And that was the big trade, actually, which I describe in the book, where I called out my best ever trade, although, it wasn't my biggest ever trade. It was the one that I just traded so well. But, I can do that, even though I don't trade anymore for a living. I still sometimes, kind of have a bit of fun with the markets in my own PA accounts. And sometimes it's almost like, yeah, I knew that was going to happen, or you just react, you see something, and then, because I'm doing this, I don't have time to follow the markets, do the research, to read the stories behind it, but I just see something happening to the price, and it's just second nature says, and then, okay, this has gone as far as it's gone, get out, which wasn't how I worked, but you just pick up things almost, but as we say, that they become intuitive to you. But when you're new, you can't do that, because you haven't had those experiences, and they haven't made connections. There is some brain science behind it. You've just not made those connections, built those neural pathways yet in your brain that doing this job for many years do actually build.
Yeah. Yeah, I'm just frozen thinking, do I wait? Do I not? And I've got over. I've had to work on it since, but that was my initial challenge with bait. But on the topic of behavioral slippage, I guess, is it something that you see quite prevalent in traders you talk to, or is it something that you think that a lot of people have?
My first point is that everyone has it. If you look at sport, Lionel Messi has it. The, you know, Novak Djokovic has it. Every great performer has it. But if you compare them to everyone else, they have it less. It's a smaller behavioural slippage. They work to continually reduce it, and then, so, and it's also, the potential is already higher for them. Behavioural slippage for Novak Djokovic means he goes out maybe one in every 4 tournaments at the quarter-final stage. Behavioural slippage for a lower ranked tennis player, maybe the number 20 in the world, means that he goes out in the second round or third round of 3 out of every 4 major tournaments. So do you see what I mean? So we have our actual potential is either higher or lower, which is what we're trying to do by developing a process, a way of working, and understanding of the market. And then behavioral slippage is what do we do that undermines our ability to not reach that level,
Mm.
you
Yeah.
know, and we all have something, you know, we don't know what they are. It could be something physical, you know, for occasionally, it could be something mental. You know, we're just not right on the day. It could be, you know, a blockage somewhere in our system. You know, it could be something in our process that needs to be addressed. But we all have it. You know, we all have, you know, we might be working, when I say in a process, we might be working in a way which doesn't suit the type of market we're doing. So I see this quite a lot. I see people beating themselves up because they're not making money, when actually their particular process and the market conditions mean they wouldn't be making money. You know, you
Mm.
can't make money consistently all the time. You know, for example, if you're a mean reversion type trader in the rate space in the year 2022, or the energy space in the year 2022, you are probably going to lose money at best, because you know, we hit incredible volatility. You know, after the Russian invasion of Ukraine and after the return of inflation in those markets, and you couldn't fight those markets. You couldn't, the normal relationships that were set in those markets, they weren't mean reverting. And yet mean reversion might have worked for you over 20 years, and that just may have been the year where it didn't work for you, and maybe at best you broke even, or you might have produced a small profit or a small loss. Behavioural slippage in those occasions was to make that small loss a big loss, or a small profit a loss. You
Mm.
know, but you couldn't just turn around and become the momentum trader, because that's not your style. After 20 years, that is not your game. You know, so those conditions weren't right for you, but they were right for you most years. And the other way around, you know, if you were very much an asymmetric breakout or momentum style trader, or a trend follower, you know, in those markets, those years, you should have been crushing it. You know, in
Mm.
energy, in rates, but then come back to the subsequent years, and you know, good performance is a much lower return. You know, good performance in those markets this year might be single digit returns, whereas good performance in those years, you know, if you're talking about institutionally, you know, for hedge funds, maybe 20, 30, 40%. But
Yeah.
so, you know, your behavioral slippage is really the difference between what you should have made or what you could have made and what you actually did produce. You know, that's where this comes from. That's
Mm.
where this term comes from. And we all have it, you know, but is yours large or is yours small? That's the question.
Yeah.
You know, and it's a metaphor. We can't actually put a number on it. It is purely a metaphor, but it's to recognize that we all have it, and we can usually, with a piece of work, find the sources of it, and then we can work to try and eliminate it. But as you know, I often get asked by people, you know, I'm very ill disciplined, and I need to improve my discipline. But discipline is just a symptom. It's not an actual cause. It's not an input. There's something else
Mm.
going into their process and the way they're doing it that is leading to what they call ill discipline. You can't, you know, you can't solve an issue by dealing with the symptoms. You just move it somewhere else at best, or delay it at best.
Yeah. God, that's such a great point. Because I feel like in the world of however many uh, motivational or discipline kind of focused videos or snippets you might find, um, that you think will solve your problem for a week, but in reality, as you said, there's some kind of root cause that's driving a lack of discipline. But when I was reading about behavioral slippage, and even when you were just talking there, it wasn't that trading that came to mind for me first. It was actually, I used to play table tennis competitively. And when I was playing for, I think before for the Irish team, or if I was playing within Ireland or interregionally or whatever, you use the word unforced error in your book, which is a
Yes.
common
Yeah.
word, common word I used to think of or be told. And I wish I knew you when I was, 16 or 17, because I had because I think my behavioral slippage was quite high, basically, and I had a coach who was the Irish coach at the time. I think he said to me or someone else, you know, Colm is an amazing player. It just depends which column shows up. And I remember
Yeah,
at the time, I completely disregarded it as, okay, whatever, I'm great. I think I'm good. Da, da, da. And in hindsight, I think, I wonder if he had a point. And really, when I read about you mentioning unforced errors and behavioral slippage, I was thinking, God, this is really bringing me back, all the way back, right? And because that stuff does carry forward. So, yeah, I just
and
wanted to share that. I thought it was.
that's why I say trading is a performance activity. It's got far more in common with you as a tennis player. It depends which comb turns up at the market every day, and that's why the first part of the cycle is the being phase. It's getting yourself to be the right person on that day in the right state. If you
Mm,
turn up in the wrong frame of mind or with the wrong attitude, or the wrong um, the wrong head, in the wrong headspace, quite often because actually you haven't finished the previous cycle, you haven't let go yet.
mm,
You are going to perform badly. You're going to be desensitized to the market. Okay, and if you're desensitized to the market, you're not going to see things as clearly. You're not going to feel things as clearly. You're not going to be as objective about what you're seeing. You're not going to be immersed within that market, and picking up the signals and the noise, because you're just desensitized to a lot of it. You might be holding biases and views, you know, often an ego view that I'm right and screw what anyone else is thinking,
yeah.
screw what the market's doing. We know that's usually a bad place to start. So if you start in the wrong place, it's highly likely that everything else that follows is going to be compromised.
Mm. And when I look at your performance process cycle, I feel like most people would look directly at the kind of production and performance phases of, waiting, what's my trigger, wait for the trigger, I'm actually in the trade. But yeah, I think just hearing you now talk, I don't think really that was probably my biggest challenge personally. And I wonder if it's not necessarily everyone else's biggest challenge, when everyone, I guess, newer traders are always looking for the best strategy. It's maybe nothing to do with the best strategy, and more to do with, potentially, as you said, the being phase and the letting go phase, in between the actual performing.
Yeah, well, I mean, I actually take the view that I tend not to work with new traders and young people in their first 2 or 3 years at least, because for me it is about learning the technical side of the game, the transactional side of the game. If we go back to your table tennis, you had to learn table tennis first. You had to develop the skills of you had to practice a lot, and then once you get to the high levels, the performance levels, the competitive levels, where you're competing
Mm,
against other people that are probably as technically gifted as you, if not better, you then need to bring something else to beat them or to sustain yourself against them. And that's the bit where it sounds like you were challenged, like a different version of you might turn up each time.
mm,
Um, you weren't perhaps in the right space sometimes to play that game, but you knew how to play the game. You knew
yeah.
what you needed to do. It was just the ability to apply it in the moment, in real time, that
Mm,
that became challenged, and that is the behavioural slippage. And that's the same for every trader. Eh, After a few years, every trader knows what to do. They understand the
mm,
market, you know, but they just don't do what they need to do for reasons unbeknownst to us. We make all those classic mistakes. We allow the ego um, to mislead us. We allow ourselves to get distracted. We, we put ourselves over the market, and we do the unforced errors that are probably far more in trading because of how much it goes on up here,
yeah.
than we do in tennis. And everyone has a weak side to their game. Um, I love exploring sport as an analogy, and you've got you had the three, you know, Nadal, Federer, Djokovic, and for a while Murray as well, the four almost. They were equally at times they were all number one in the world, but equally they could all do the unforced errors, have a bad day under, sort of in a certain circumstances, one would have the edge over the other. Their head wasn't right at one particular point, or they would get inside the head of the other person,
Mm.
and or the other one would find a chink in their armor and expose it. I remember I've been reading a book on Djokovic recently, and they were talking about a game, and I think it was a French Open final with Nadal, where Nadal was, I think it got to something like two games to one, and Nadal was all over Djokovic, and there was nothing Djokovic could do. But because of the rules over time, the game actually had to be called to a halt overnight, and they had to start
Wow.
again the next day. And Djokovic had just started working with this data analysis coach. He wasn't a big fan of that, wasn't into that. It wasn't really used much. I think it was an Irish data analysis coach, just to sort of bring it to on a nationality basis. And he sat down with Djokovic afterwards, and he went through all the points that they were doing, and where Djokovic was serving. And, when he was serving to a particular part of the court, which is normally a strong part of Djokovic's serve, Nadal was getting everything back and winning every point. And he had to say to Djokovic, you've got to serve when he's on his backhand in a different place. It's almost like you have to serve, I think, to his forehand was the description, which is not in this particular, and I think it was the sort of backhand part of the court, the advantage part of the court. That is not good practice normally to serve to the forehand, because normally an individual is stronger on the forehand. But they changed that the next day. He served to his forehand. Nadal was in the wrong place and he won the point. And then it threw Nadal's game out. Nadal had to keep adjusting. And Djokovic ended up winning the match. And, it just shows how these, I almost forget where I'm going from where we started.
No, it's
This question shows
no,
where the behavioural slippage can come from.
hmm.
So now the behavioural
Yeah.
slippage is back on Nadal. And of course, once that starts happening and you get thrown out, other parts of your game start to crumble. One part of
Mm.
behavioural slippage doing one thing part, you normally create a whole cascade of things where different parts of your game fall apart. And you probably saw that in table tennis all the time.
Yeah, it was the domino that led to
Yeah,
the overall collapse. I'll never forget being, obviously in table tennis you play up to 11 for each set, best of 5 wins,
yeah,
and being 10-4 up, 2-0 up in sets. You need one more point to just end the game, and I could go on to lose the whole game. Right?
yeah,
It might just
yeah.
one thing, and it's incredible. I think you summed it up really well, and you said, we all know exactly what to do. We have the skills, but for some reason, we just can't do it. It's like something clicks and it blocks us somewhere else, and then
Yeah.
everything can crumble. Right? So it's such a powerful sentence, I think you said.
And it's at that moment, if you can stop time and let go at that moment.
Mm,
There was a great example of that from tennis. Djokovic was the master of that. And it was a Wimbledon quarter final about 3 years ago, I think it was, where he was playing Yannick Sinner. And Yannick Sinner was playing Djokovic off the park. He was 2 sets to love up. Djokovic wasn't getting a sniff. And Djokovic asked if he was allowed to have a bathroom break. And he told the story after the game that he just looked in the mirror in the bathroom and just sort of, okay, this is what you've got to do. Pull yourself together. The guy is killing you. Rethink about your game. Try and turn it around. Try and put it back. Come in. And that toilet break changed the game. And
mm.
the next set, quite often when you exert yourself, you step back a little bit, which Sinner may have done. Djokovic won the third set. And then in a fourth set, which becomes a real battle of attrition, Djokovic turned the tide in the fourth set and he went on to win the match. And, by the fifth set, Sinner had crumbled, and the stuff he was doing in the first set, he just couldn't do in the fifth set.
Mm.
And vice versa, Djokovic was doing stuff that wasn't paying off in the first set. And it was all up there. It wasn't in their game. It was all
Yeah.
in the head, sorry. So, and that's why I'm saying Djokovic was a master of that. And I see traders who do the equivalence of that, who can just let go and move on. And it's like, wow, how did they do that?
Mm.
They're completely wrong, but they've not attached themselves, even though they had a really strong opinion. And you know, if you've ever read the interview that Peter Brandt does in the last Market Wizards book, and it's his section is titled, Strong Opinions Weakly Held.
That's right. Yeah.
Peter Brandt is someone who has strong opinions, but he lets go of them really quickly. He doesn't allow them, and he doesn't attach. We've all heard that phrase, being married to an idea or a view or an opinion.
Yeah.
That's the ego that you're really marrying at that point. That's the ego taking you over, and you lose any sense of objectivity to what's happening in the market. And it's if you can let go of things like that, getting back to the very beginning, and get back onto focus, then you will start to perform better.
Yeah. Wow, what sounds like that is like the antidote to behavioral slippage, then a little bit of forgiveness, separation, and letting go. And then maybe you can give yourself the chance to give yourself that chance for the next trade or the next point, whatever it might
And
be.
self-compassion. Forgiveness is self-compassion. But to
Mm.
forgive yourself, you've got to be vulnerable as well. So a big part of that letting go is being vulnerable. It's the Muhammad Ali story, which I tell in that book, it's listening and accepting that you aren't the greatest thing ever. Actually, you're going to lose if you carry on this path, and admitting it, and then finding a new way to deal with the challenge you have in front of you. That Ali story all started with him accepting his vulnerability, and that was to me that was self-compassion at its highest, because he's being good to himself actually by allowing himself to be vulnerable at that moment. And we need to do that in trading. Accept that we're wrong, accept that this view we got, which we thought was going to happen, is not happening, or we've just got the timing wrong, or whatever. Can always get back in once we get in sync with it again. But at that point, it's just not right.
Yeah, you can just get back in. It makes so much sense, but in your head at the time, it's like the last thing that comes to mind. And Simon Rees said that to me as well. You don't need to. If I'm wrong here, or if I'm eventually right, I'll just get in later on. And I was like, yeah, that makes sense, But in the moment, it's not what comes to mind. You're like, no, maybe just hold on. And I'm talking about a previous version of myself, not my current self, but before I met all these amazing people and made my own mistakes. That's exactly what I would think, was just maybe if I just hold on a little bit. And yeah. I wanted to move a little bit back to your career because I know we spent some time on behavioral slippage, but I read you had a kind of quite transformative point in your career when you started working with a coach. I'm not sure if it was halfway through, but
Yep.
at some point into your career. So, can you talk a
Mm.
little bit about, I guess, what changed when you started working with a coach as a trader?
Okay, well, I've done so much reflection on that just to start with, and I am still realizing even now what happened in that. And
Mm.
if I go back to that, and that was Peter Burdett, that was the individual who does the forward on the book, who I worked with. But I'm going to go back to a period just before that, when my manager at the bank I was at working, and he was new. He'd come in from a different bank where he'd been in a senior role there. And he came up to me and he said, "Look, Steve, I'd like to bring in this coach that I've worked with in my last place. I think he'd be really good for the traders here. I've been given permission to do an experiment with one trader. I think you'll be the person, out of a couple of hundred traders on that trading floor, the most the person most amenable to this idea." And I immediately went, "Yeah, no way. I don't need to work with a coach. I've been doing this job 13 years. I'm a senior trader. What are you telling me? I'm not good enough. That was my reaction to that. My ego immediately, put the defenses up, and he backed down. And then he approached me again about a week later, just as I was walking out the office to get a coffee, and he said, "Look, Steve, have you thought about?" I took it as a personal insult. Okay.
Okay.
I said, "Listen, I understand where you're coming from, but I think you'd really enjoy this. I always loved reading about the psychology of trading and understood that was where the battle was. But he said, I think just give it a go." And he kind of twisted my arm. I said, "Okay, I'll give it a go." And I was really cynical about it, really skeptical about it. I just thought, I was struggling at the time. My career, which had been on an upward path, had gone into a decline, and I wasn't in a good place. The previous, 2 or 3 years, some things had happened politically at work that didn't work in my favour, and my confidence around my trading had sort of dissipated, and I think I was hiding a bit. And again, that's my reflection since then of what was going on in the lead up to that. Now, Peter wasn't actually a trading coach; he was a leadership coach, an executive coach. But my boss, who asked me to suggested I work with him, felt it would be useful. It's the same stuff that works for traders. And I had 6 sessions, 6 meetings with him of about 90 minutes at his offices in London, where we just chatted about. We didn't really chat. He uses a format which I use as well, which is based around a particular philosophy and psychology. To really get into understanding who I was, making me think who I was, making me aware of who I was, how I was, what I was doing, and sort of reflected back to me what he was noticing or hearing through that process. And I just went through this without realizing it, this transformational journey of self-awareness. We started with self-awareness, okay? And without realizing this consciously, but definitely unconsciously, I've only realized it consciously many years later. But until that point, I don't think I was a risk taker. I think I was someone who was probably more of an analyst who took risks, but I wasn't really a risk taker, even though I'd been risk taking for a living for the previous 13 years. What happened there, what transformed me there through that process of much greater self-awareness, was I became a risk taker. I came out of that now as a risk taker who used analysis as a key tool within my process. But I was now a risk taker, and everything changed. In small steps, and it just kept on building. It was almost like something had been lit, and it just kept growing and growing and growing. And I became a much better trader. I became a much more confident trader. I became far more comfortable engaging with risk and uncertainty. I became far more focused on developing a process, developing, I kind of gave myself this 2 hats mentality, which I didn't have before that. And it was like, one hat was my analysis hat, and the other hat was the risk taking and risk management hat. And the analyst would look at the market, would come up with trades, and I'd have that hat on there. Then those trade ideas had to be given to the other one. The hats would change, and I had to work out how to put those trades on, how to manage them, how to monetize that idea, whether that idea was monetizable for me, in the way I worked. It might have been monetizable for someone else in the way they worked, but for me it wasn't. So it had to fit with my process. And that is where I went, and I became a much better trader in those last 10 years of my career, until I decided to become a coach. Now, that coaching changed everything. It's incredible how much happened in those sessions for me and how much I took from it. and people started noticing it around me as well. You see it in the way people come to you and the way the world works around you. And I would say, it became the first time that I actually owned what I was doing rather than was owned. You never completely own because you can't own what the market's going to do, but you can own how you respond in response to what the market's doing. You own your trading. You own your failures. You own your successes. All of those things. It started with that coaching process and that the self-awareness that came from that. And it's strange in this industry how even now what I experience when I talk to people about what I do, they all react in the same way I reacted, or most of them react in the way I reacted back in the year 2000.
As an insult.
As an insult, or dismissing it, or being cynical of it, or skeptical of it. When you think about trading as a performance activity, if you actually became a professional table tennis player eventually, you would engage with coaches all the time. You wouldn't even think about it. If you want to get to be the very best in what you do, you work with coaches, you work with people that enable and facilitate and catalyze you to be able to play at the very top level. And every tennis player, every golfer, every footballer, every sports person, every athlete, they have coaches that get them to that extra level, that catalyze it for them, that help sustain at that level, that hold them to account. So it's, and when you think about the potential payoff of what that means, I had one client, admittedly a very big trader at a large hedge fund, who I challenged a couple of years ago when there was a couple of months left of the year. I challenged on something he was doing, on a decision he'd made, not a trade, but a decision he'd made about his trading. And the consequence of that was that for the firm, he made $40 million over the next 2 months that they wouldn't have made. And that was his money. That was the firm's money. But it was my conversation with him that catalyzed that. He wouldn't have gone down that path of actions and behaviors. And he would never have known that he wouldn't have made that. Okay. But, and it wasn't just that was that number, but it led to changes the next year. The next year, he had his best ever year. And he'd been doing this 30 years, at a major hedge fund at that point. And it started really, really well. And yet, Silicon Valley came along and destroyed a lot of his P&L a couple of months later. But he recovered from it again, and he got back going again, and he got on the, and this was someone who already was at the top of the game, but, it doesn't matter what level you are in this business. The job is challenging, and working with coaches can help, facilitate, huge improvements, huge growth, and help you sustain that. And even when I was early in this career and trying to build up a coaching practice and didn't have many clients, and I used to get asked about the coaching, and they'd ask me the price, and I'd send them the price. And if I'm fair, I was a lot cheaper in those days. And I used to have, both professional traders and retail traders come back to me saying, "No, I can't spend that on coaching." And I used to think, okay, so I'll give you an example. Maybe 2 years gym membership was roughly the price of my coaching then. Okay. And people would see that as a cost rather than an investment. And, when you think that there were people that were making hundreds of thousands over the next couple of years as a result of that investment, because they were working at a higher level, in some cases, they're now in hedge funds when they were just private traders at the time, because of what that started for them. It gives you a sense of the power and the value of coaching.
Yeah. And that point on the thing, I guess that the things that client didn't do, um, is a really good one, because I feel like when you work with a coach, or when I work with beta, or if I work with personal coach, you know, you have sessions and they bring awareness to certain things that are mistakes maybe you're about to make, and
Yeah.
because you've had the session, you never make them. So it's
No.
almost like, oh yeah, I've done this thing, but I think it's a great point to realize all the things I didn't do because I've done this thing now, and that's the massive amount of value. Sometimes, I mean, for me, if it was in my personal life and I've worked with people, and different things, that paths I didn't go down that would have
Yeah.
been incredibly destructive, but I didn't go down them. So I can't sit here saying I did, but I have the value in not going down them, which I think is pretty amazing. Yeah.
Yeah. I mean, listen, we have these sliding doors moments all through our life,
Mm.
when, we could have taken a different path. I always wonder where I'd have gone and what I'd have become if I didn't have this coaching, and I'm sure I'd have been fine. But actually, it just had a massive impact on me, on my trading, and I do know what that changed for me. And I became an advocate for it. I always do look back on that period and think, why didn't I go back to him? I went back to him 10 years later for some career advice, which actually got me into coaching. But I do work with people that have been working with me 4 or 5 years now, and I just think, they are, you know, wow. That's. I wish I'd have been like that and just kept that coaching going and knowing the value of it at that point.
Yeah.
But we don't have a coaching culture in this industry. We have a coaching culture at the top level of sports, but we don't have it. It's not part of the trading industry. I'm part of trying to change that. Um, I can only do so much because I'm I'm one person and I can only coach so many people at a time. But I've got Mark who works with me. I've got Peter, who himself is pretty full up on coaching. But there are more and more people coming into coaching now, working with traders.
Okay.
But it's still a tiny fraction of the industry.
Mm. Yeah, it's not something you hear of that often. You're right. If I try and think of, I mean, you would be the leading coach in all of the traders I had made. I'm not sure of too many more, but when obviously you had to make that jump at some point from, I guess, trader to coach, and I just wonder what 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 was it that made you become a coach and leave the world of kind of being a trader behind, and then go towards the world of coaching traders.
So it was just sort of circumstances. So I'd been working at um, a bank at that point that it wasn't anything to do with the financial crisis itself, but just after the financial crisis, the global financial crisis, um, the bank was sold to another bank, and that other bank just sort of closed down the prop trading business, which I was part of. Um,
Okay.
and I found myself looking for work. And knew I was at a crossroads. I had a couple of job offers on the table that I didn't really like the sound of, or they didn't excite me. I wanted to really take what I was doing to a hedge fund and try it in the hedge fund space. But I was struggling to get any traction in the hedge fund world. It was after the financial crisis. There wasn't a lot of hiring going on, and there was, you could almost say, thousands of traders out of work, all from big investment banks such as Lehman's, Goldman's, Bear Stearns, Merrill Lynch,
Yeah.
all looking for jobs at hedge funds, all with the contacts in the hedge funds, all getting ahead of you in the queue for the few jobs that were there at that point in time. So I wasn't getting any traction in landing a hedge fund role. And I decided to go back to Peter and talk about what I should be doing, sort of career turns, with no sense at all that I was going to do anything other than trade. I would been at my best up till then. And he just sort of blurted out to me during our conversation, have you thought about becoming a coach? And I think as he said that, and those words left his lips, I'm like, that's what I want to do. I have no other, yeah, I have no other, there's nothing else I want to do. It's that. And I did have decent job offers come along, and I just said, no, this is what I want to do, which is quite hard for my wife because, I'm going in to do something completely new, completely different with no income, where to be honest, I was going to be learning for a few years and I wasn't going to have any or many clients for a few years. So I wasn't going to have any income coming in for a few years. And she had no idea where I was going with this, whether there was even the possibility of making money doing it at some point in the future. She had no clue. But I decided, in a way, that I was meant to do this. And that's, I felt passionate about doing it. And I thought at first I could trade on the side, trade my own money, just continue to, trade the markets. But I couldn't, because this job is totally, you're either in it or you're not. I don't believe you can do. Some people can. I think a lot of retail traders, they have other sources of income, and I think they need to, in order to, sustain what they're doing and make sure, because they don't know whether it's going to become a career or not. And even if it does become a career, it is nice to have another source of income that means you don't have to rely just on your profits. At the very best, you can reinvest them. If you have a losing period, it doesn't mean you're not going to eat that night. So I think to help, there used to be another source of income. But for someone like me who'd worked on the inside of a professional firm, I could only trade where I was 100% at it. I couldn't be 95%, let alone 50%. So I decided to leave that. Like I said, I do have a little PA book with a spread betting firm that I've never truly stopped, but it's just a bit of, I call my fun account. And actually it does pretty well, bizarrely, because I don't really, the sizes are small. There's no pressure on me. But there was another side of that decision to change as well, I think, which was like, this job is stressful by nature. It can't not be. And in fact, I was probably taking on more stress in those last 10 years when I was more successful than I was before that, because I was taking much bigger risks. And there is a point where that wears you down, where you think, do I want to be doing this for the rest of my life? Do I want to take that stress home all the time? Do I want to have that on me? Do I want to be thinking away when I'm on holidays, what's my positions doing? What are the Fed going to do? What if I didn't want that anymore. Much as I love trading, I also wanted to let go of that side of it. So this was, I think, a way of, even though I wanted a coach, there was an element of, what, I could live without the stress as well. That wouldn't be too bad either.
Yeah.
So I think somewhere I don't think that was the main driver of that decision, but somewhere it was within that calculation, or it made it easier.
When you were speaking there, you mentioned, it's kind of 100% job, and I've never worked as a trader. I work in a bank, but I did shadow someone on the trading floor as a sales guy. Because I was thinking, oh, maybe this could be a good move. When you go down there and people are shouting stuff out and orders and things like that, I immediately thought kind of high pressure performance, and it does seem like high stress and high, just 100%. I couldn't see if I did move, say, horizontally in the bank in that area into a trading role. I don't think I could do anything else. I don't think I could be. I very unlikely would be sitting here talking to you, and there's lots of other things. So as much as I do, it is a big passion of mine. Taking it on like that, I can completely understand why you would say maybe that part of the stress, maybe I could leave behind and stay in it in my own way.
Yeah, and I think if I'd have started as a setup trader or retail, I call retail traders often setup traders. You have a system, you have a setup. It's a different approach. You have to do it that way because you don't have the that when you've worked in a bank or in a sell side firm, in a prop trading role, maybe in an exchange type firm. you really rely on the liquidity, understanding the liquidity of the market, understanding what's happening, at the very, very epicenter of the market. And you have to immerse yourself in the market to do that. Now, as a retail trader from home, you're just too far removed from that to be able to use that. You still want to understand it and know what's going on there, but you're not first dibs at getting that information. It's hitting the people there much quicker and much far more potently. So, that's what you do when you work as a professional trader. You're working with that epicenter of the market level. When you're sitting home as a retail trader, you're generally finding that you're using setups, which you can do where you don't need to be at that nub of the market or that epicenter. That there's always, that there are so many imperfections in the market that the setups are a way of finding them. So it is a different thing, but I wasn't that type of trader. I wasn't brought up as a retail trader, so I couldn't have just gone to that. That wasn't how I made money. I didn't have those abilities, and I see this a lot. I see this where professional traders actually sometimes go and work at their home on their own, and very few of them succeed. There are some, but it's a different game. It's the same job, but a different game. It's the same, like you said, the same psychological aspects happen, but you are playing the game in a different way. You can't be. So it's very hard for them to adjust to that and let go of what they knew. It's why a lot of exchange traders couldn't make it behind the screens, because without realizing it, they were playing a different game in a different way that they weren't brought up to play.
Yeah, it reminds you of Bate, who kind of his working setup is kind of multiple screens and in front of a squawk box, getting the news every minute, and he would share the news in a Slack chat for all of us. But yeah, he's just reminded me. It sounds like he's tried to take the desk at us trading in a bank and just move it and try and be at that epicenter via squawk box or constant news.
Yeah.
Whereas other people I know just are those setup traders. Like me, for example, I do wait for setups because other than that setup, sometimes I shouldn't be there at all. Sometimes I like to take macro views, but now after speaking to Jason Shapiro, I'm worried that my macro views are already in the price, and you know what I mean. So then I end up like, oh shit,
Yeah.
So I'm at that stage at the moment of trying to figure out my own process. If I'm honest, I thought if you asked me 4 months ago, talking to Bate, I thought I had everything figured out. But Bate has that 30-year, 40-year spot trader knowledge that I don't have, and so I'm beginning to question myself a little bit and try and figure it out.
But it might be that the macro view, that's a different way of trading it, but it's another way of trading it. It's a setup in a way. But rather than just, what often a bank trader or a fund trader, what I would call a house trader, would often do is, the market's going high, they'll just go long. They don't look at setups. They just get themselves on the long side or the short side of the market, and they run it till they feel they no longer want to be in it. Whereas a setup trader can do the same thing, but they'll look at the macro setup and they'll take a player approach, which is, I'm going to risk X. My stop is going to be here. That will set my size based on how far the stop is. The risk reward is a multiple of X. Part of the decision is it big enough for me, that risk reward? Is it 1-to-1? Do I want to take 1-to-1 risk reward? Probably not. I probably need 3-to-1 or 3-to-1 or 5-to-1. Although another consideration will be, well, is it pro trend? In which case, I'll take the lower risk reward, the 2-to-1. Is it counter trend? Maybe I need at least 5-to-1. So you've got all these considerations that start becoming part of the setup, but it doesn't mean that you can't create the sort of, put on a macro trend position. But you're trying to understand the nature, and you're setting up your process based on that. And you may have a set of steps. If it goes through this resistance, I'm going to increase the position and move the stop up to a new level and keep doing that. So there are lots of different ways that you could do that. And you can be pro-trend with that. You can be counter-trend with it. You can be neither. You can be just, well, I'm working with a breakout. Sometimes that breakout is pro-trend, sometimes it's counter-trend. We're not really trying to figure it out. We've just got a nice setup that we like. So that's where the setup side of it, but understanding the positioning of the market can give you advantages and disadvantages around those elements that can get you in earlier or later, depending on what whether you need that extra confirmation.
Yeah, and you raised an interesting point about risk reward. Very simple point, but it's only something I think I've kind of reflected on recently. Where probably up until 3 months ago, I always had this immediate thing where I'll take some risk off, and I've said this in interviews now, not even so long ago, but I'm kind of going back on myself now. But when we hit 1 hour, I'll take something off to manage my kind of head. And more recently, I think you've highlighted it now, that it just depends on your process. As you said, if you're trading counter trend and you need a 5 to 1 hour for this trade to be a valid setup because it's less likely and it's not pro trend, then I don't think you can't take 1 hour. You can't take 25% of the risk off at 1 hour, because then it will reduce the overall reward of
Yeah,
your trade
yeah.
reasonably significantly.
This is the bit where you've got to look back at the process and say, what is my process? What is my win rate? What is my loss rate? What return do I need? Therefore, what trades must fit in with that? Because just as an example, you're going to have an average win size and average loss size. So you may base your decisions on say a 5 to 1 trade. Okay, and if you let's say you lose, I don't know, 75% of the time, but you've got a 5 to 1 risk reward, so the 25% of the trades make more on average than you lose. There's a great process. But if you always take profit 75% of the way towards that target, you've killed your profit completely, and you're at break even at best. So it's understanding, what is my process? And I know it's not that simple that we have to make choices, but actually we do need to make sure that we're clearing sufficiently our profit line. If we always take our profit at 80%, you're not really taking 5 to 1 risk reward trades. You're taking 4 to 1 risk reward trades, and that honesty is really important.
Yeah, and as you said, it's probably something very simple you learn very early. But I've probably done thousands of trades at this point, if at least hundreds of decent trades. And it's up until now, I'm thinking maybe this thing you're chipping away at in your process isn't actually serving your overall process. Maybe it's just something you've inherited that's not actually, over when you reflect, not making you as much money as you should be making, maybe.
Yeah.
So
We get caught in this game, which is the like I say, the ego game versus the process game. Process and ego are actually the antonyms here. Ego wants us to be right. Process wants us to make money. There's a difference.
Yeah. Very good point. Very good point. I had one last question I wanted to ask you. So if you had to essentially start again as a trader, start your career, but knowing what you know now, and you could only have one skill or characteristic, what would it be?
Only had one. Well, would it be the ability to let go? I wish I could have been humble enough early in my career, because letting go is what makes you humble. It brings humility. That ability to let go, and that self-awareness that goes with that. And I'll give you an example of something that happened early in my career. So I had, about 7 years into my career, I had, which on all measures, is still my best ever year. I sat back, I was on a trading desk of about 12 people at a large investment bank. I didn't get caught up in the excitement of what everyone else was doing. I stood back and thought, and there's reasons to this, but something's not right with the market, that everyone's too balled up. And I took the other side of the trade eventually, not initially, but I stayed out of that trade. And then eventually I took the other side of the trade. And I made a lot of money that year, and most people around me got very badly hurt. The business around I was part of, I was the junior on the team, ironically enough. So no one was listening to me. But, I did try to sort of state the case for my argument. And that year set me up. I got moved onto the prop trading desk where I was. I got a lot of credit for that year. But the next year, I tried to repeat the previous year. I didn't look at the market objectively. That my ego had become inflated. I didn't let go of that year. I just tried to repeat the same trades, and it was a different market the next year. It was like crazy. I wasn't looking at the market. I wasn't assessing it with objectivity. I hadn't let go of the win. Letting go just doesn't mean letting go of losses. I don't have such a problem letting go of losses or failures. It's actually letting go of successes was much bigger for me. I spent the whole year still on the dance floor from the previous year, and it cost me a lot. So you've got to let go and move on, and that's what the greats do. It's not just letting go of failures. It can more often be letting go of success, because it's success that causes your ego to attach itself to you and really, almost like a leech, take over you bit by bit till you lose sense of reality. So it wasn't even repeating the good year I had. It would have been being better for the next year, having let go of that and being aware enough. And that would have kept me in good stead going forward for many years.
Wow, Chris, I feel like thank you for sharing that. It's an amazing answer. I think it's in those successes that people maybe don't look as quickly as they do in the failures. So it's interesting that it was a success that was letting go of or not letting go of a success that hampered you the following year, not necessarily a failure, but something positive that should be positive.
Yeah.
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 Wow.
Yeah.
Can you let people know where they can find you, Stephen?
Yeah. Well, there's the book, which I'm going to repeat the name again, Mastering the Mental Game of Trading, which is available on Amazon and virtually all good book sites. There is my website, which is being redesigned at the moment, but it's alpha R, the letter R, and then cubed.com. Or I have another site, alpha-mind.net, which is a slightly different business. I'm on Twitter at alphamind101. I post a thought or reflection most days. And I'm on LinkedIn, and really it's across those various social media sites that you can DM me if you want, or get hold of me in some way.
Awesome. I will link all of those things in the description. And yeah, anyone, please buy the book, because you'll end up on an inward journey like I'm currently on. I'm not finished. I'm about a third way on, but I think I remember you saying in a podcast maybe it was just with Mark on your own podcast, you were concerned people wouldn't get past the first third. I promise I will get past the first third, but it's just how much I read ahead of this interview. So buy the book, please do, if you're a trader or anyone else that's performing in something
Yeah.
under pressure or anything. I highly recommend it.
Yeah.
Thank you so much.
I get this a lot. People go back over the first third, and sometimes they don't get to the end because they just stay in that first third. And it is the final bit, the letting go bit, that is, I'd like to have started it with that, but it's in the wrong order. And to be honest, that's a great metaphor for why letting go is so difficult in trading. It's the last thing we think about.
Yes. Yeah, absolutely. Yeah. But you can't. I feel like I can't stop because I feel like there's each thing I could be doing wrong within each phase. So each of those last four chapters, essentially, there's the detail about the phase. So yeah, it's like if you, I feel like the real value will be in those in that and up to the end. So um, but yeah, I just want to say thank you because this has been a great interview. I feel like it's one of those interviews where I'm not sure I'll remember it directly afterwards. There was so much depth and and important things we spoke about. And I hope that a lot of people related to it. But it's been a really really great conversation. So thank you for your time.
Been a pleasure.